So FX market. So this is what I have here is the euro dollar. Now, before I start with the live market analysis, just wanted to show you something. Okay, I actually saved this email that I did. This was last week. Okay, the reason why I did that is because, and I emailed it to myself and I call it bread and butter. The reason why I did that is because I just want to show you what a good trade plan is in terms of trading with the trend. Okay, so this is a intraday kind of setup, and if you look at the three charts I have, I always use 3 time frames to trade. Okay, for me at least 3. And my intraday time frames that I use are the 5 minutes, which is here on the left side, the 50 minutes, and the 1 hour. Okay, these are my intraday time frames. If I'm looking for intraday slash swing kind of swing type of trades, then it would be 1 hour, 4 hour, and daily. Okay, sometimes I cross-reference to weekly as well. Okay, but not that often. But intraday setup, normally I execute on the 5 minutes. So if you look at this particular trade, okay, of course, on hindsight, you can see that it turned out well. But I just want you to be able to appreciate, okay, how trading with the trend is so much easier. Because if you look at the chart, okay, and if you look, this is a 1 hour chart, right? It is technically a downtrend. Okay, it made a nice little let me just take out my drawing tools here. Okay, it is in a nice downtrend, isn't it? And then it make a correction. Okay, but you can see that a lot of these levels here, there's a lot of resistance. It can be here or it can be here. So the first level of resistance, it reacted from, it came down, but then the bull still supported and pushed it back up again. Okay, and when it hit the second level of resistance, it came back all the way down. So for me, the key level that I was looking at was when it broke this low here. So this low compared to this low is actually called a lower low. A lower low. Okay. In fact, this low here was actually this level here. Okay, I'm zooming in a bit more. This is the 50-minute chart. So this low here that I'm talking about was actually this horizontal support here on the 50-minute chart. So in my mindset, the 1 hour is showing that my reference chart, which is a 1 hour, okay, is showing that it's coming down. Okay, the 50-minute chart is confirming that when it broke this level, you see this down move here? This confirmed to me that, okay, the bears are coming into play because it broke this level, and this is a breakout trade to me. Okay, so I think I mentioned this before. When I say breakout trade means the market is consolidating on the support level a lot, and when it finally breaks, I'll wait for a pullback back to the previous support and resistance, and I'll take a short here and my first, and hopefully it comes down from here. Okay, so this is exactly what happened here. Based on the 1 hour chart, I can see the market is turning around, hitting off the resistance. 15-minute chart, the short-term support has been broken clearly by this swing. Okay, when I zoom in the 5-minute chart, this is the level I'm talking about. Okay, this line, very beautiful. This arrow is where the short took place. You could have entered the short here as well. Okay, it gave you a second chance because it came out touch again. You can see 4 candles could not break it. It showed pin bar, bearish pin candles, and then it came down from here. Okay, if you are going to short from this level here, your stop loss can be somewhere above the previous high. Or if you're a bit more conservative, 76.8% of the previous swing, maybe somewhere here. Okay, normally I put it above the previous swing. Because if it goes past these levels, means that maybe this is a false breakout to the downside. Okay, so the reason why I saved this chart is because I want to show it to the webinar, to you guys, to show what's a classic bread and butter kind of trade for me, in terms of what I'm looking out for, where the market is trading, or how to trade on the trending markets and things like that. So every day when I look out for charts, all I'm looking for is such setups. That's it. I wouldn't want to trade in a market whereby it's sideways and nobody knows what's going to happen. This is where you get burned because you always try to guess. And this is the kind of setup that you want to look up for all the time. In fact, if you're not even good at price action, right, if you look at the moving average, the moving averages I have here is nothing fancy, nothing magical, just your 10, 20, 50 exponential moving average. But even if you're not good at price action, simply looking at the moving average, you can see that all 3 charts is pointing more towards the downside, isn't it? And if you combine that with your support and resistance, if the moving averages of all 3 charts is pointing to the downside, it shows you that the trend is down. If a support is broken, it shows you that the trend might continue. Correct? And that's it. Just follow the trend. So just want to show, maybe from this week onwards, I'll try to show you examples of trades that worked out well the previous week. Of course, on hindsight, everything looks easier, but that's where your skill as a trader comes in, whether you're able to identify based on your strategy and execute the trade flawlessly. Okay, so just wanted to bring an example to give you a bit of a clearer insight of what's an easy market to trade. Okay, so moving back to the live markets. Sorry, KK, you have a question, right? If the trading decision is based on the 1 hour chart, do we need to look at, say, the 5-minute chart? Okay, it depends on what kind of trade you're looking for. Like the example I gave just now, I was looking for intraday trade, which is why I execute on the 5-minute chart. My reference chart is a 1 hour chart. If I'm looking for swing trade, my reference chart will be a daily chart. So it depends on what kind of trade you're looking at. But I suggest looking at least 2 or 3 charts. So, but if you're telling me that you're going to execute on a 1 hour chart, KK, and you're telling me that you're a swing trader, then I'll say definitely add in the 4 hour and daily chart for your reference, or use daily charts as reference. But if you are looking to execute on a 5-minute chart, that's just like what I did, then it's an intraday setup, then yes, your 1 hour chart is reference. But this is good to combine at least 2 or 3 charts because it gives you an overview. Okay, you won't be just myopic and stuck on the shorter term charts. Especially when it comes to breakout, it's good to revert to a high term time frame, because if you just focus on a short term chart, let's say the 5-minute chart, let's say the 5-minute chart breaks out, right? Just erase all the drawing. So let's say if you keep staring the 5-minute charts and the 5-minute chart actually breaks out, okay, you want to make sure that this level here is not a main resistance on the higher term time frame, because if this is a main resistance on the higher term time frame and there's not much meat left to go higher, then you got to question yourself whether entering along here, which is your strategy, does it make sense? Is it still worth the risk to reward? Is there any more meat to go before it hits the longer term resistance again? Okay, so there's a benefit, one of the benefits of looking at the higher term time frame. Okay, KK, did I answer your question? Okay, so if you look at let's start with euro dollar. Yeah? Again, if you guys got any particular FX pair you want me to cover, please shout out. So if you look at the euro dollar, it's been a mess for a very long time. It's still in a mess. Okay, you can see the circles that I drew, I think, the previous webinar, and it's looking like a huge inverse head and shoulders, isn't it? Huge inverse head and shoulders. So you can see that the head here, the shoulder is here, the shoulder is here, and right now it's just lingering near the shoulder again. So let me just adjust this line. The key support from, oops, sorry. Let me just go back to the daily chart. Okay, so the key support that you want to look out for is around the 105. This 105 level is key. If 105 is broken, there's a high probability that it might go to the next level of support around the 103.50 or so. But you can see that 105, which is also the shoulder level of this chart pattern, there are a lot of bids there. There are a lot of bids there. Support is very strong. Every time I touch, thing go up. So this big bullish candle here shows that there's a chance that we might see the highs of around 107 again. Okay, but if just to show you a quick glance at the longer term picture, right, you can see that euro dollar is basically stuck in a long term kind of consolidation. Okay, the key 3 levels are 11450, the key resistance, 108, and around the 105 or so. Okay, so just big fat consolidation for the euro dollar. Okay, and you can see that this kind of large, I mean, if you want to look at corrective structures on the high term time frame, right, this whole thing here, it is a corrective structure. So like what Cynthia mentioned just now about type 3 consolidation, right, for the Nikkei, euro dollar, if you look at the weekly chart, this is also a type 3 consolidation, whereby the market has established a trend and then is forming a corrective structure right now. Okay, but this corrective structure, because on the weekly chart, is since 2015. It can last for 2 years. So if you're a long-term type of trader, all you need to do is just place your alarms at the key resistance levels, key support levels, and just trade off these levels. As simple as that. Okay, if you are somebody who's very disciplined and want to stick to long-term trading. Now, long-term trading requires more discipline because, I mean, that's my opinion. The reason why I say that is because if you are somebody who is prone to keep looking at the market, checking the price after you place a trade, then if you want to be a long-term trader, it's going to be difficult. It's still possible, but you really need to condition your brain, especially if you're more anxious, okay? Because if you are prone to checking the price all the time, chances are, let's say you took a lovely short trade here, okay? Based on the previous touches here, 4-5 touches, you short at 114.50, for example. And your plan is actually to short and leave it all the way till it hits the level of support around the 105. Okay, that's a good 1,000 pips for you, correct? But however, if once it comes to the middle here and you see the market start pushing higher again, okay, you get a bit itchy finger, okay, you get a bit anxious that your profits is eroding away. And it can be quite painful because imagine it came down all the way to 1100. That's good, almost 500 pips or so, isn't it? But then it went back all the way up. So your 500 pips profit became like what? 100 over pips. It can be quite painful. And some of you might have taken it here. But when you take it here, it dropped further down. Okay, so being a long-term trader, yes, on paper it sounds easy. Just short and just buy and sell off key support resistance levels and keep it there. But it's the psychology that's tough. Okay, if you want to condition the mind to be a long-term trader, ask yourself what is the lowest amount of lot size you can trade on without being affected by the market movement. Okay, I repeat, you got to ask yourself this question. What is the lowest amount of lot size you can trade on without being affected by market movement? When I say affected, means emotionally affected. Okay, so ask yourself what that number is, and once you have that number in your head, maybe your number is 5 or 2 mini lots, for example. So okay, cool. If you think 2 mini lots is nothing to you, what you can do is, let's take this euro dollar for example. What you can do is every time the euro dollar hits a key resistance support level on a weekly chart, place your 2 lots, for example. Let's say, for example, if you are here, okay, let's say it comes back down to 104 something. Say, okay, cool, support. I want to try long-term trading. Put your 2 lots buy positions here. Stop loss below the previous low. Take profit around the previous high, around 114 or so, and that's it. Let it go. Forget about it. See what happens. Okay, because what it does is that if you manage to hit a profit target maybe after a couple of months, the feeling is actually very rewarding, okay, because you are able to condition yourself to let the trade go and let the markets take its course. All right, only then you'll be able to understand what long-term trading is all about and not be affected so much emotionally when it gets into the middle here and you're in good profits. Okay, because it can be very rewarding, just that your psychology got to be ready. Yep. Sorry, John. Yeah, John. I get the dollar yen of this. Not to worry. Daryl, does it make sense to trade based on RSI in 1 hour charts? Are you okay? Does it make sense? Yeah, it makes sense. I mean, depends what you use the RSI for. What's your strategy? I mean, RSI is a lagging indicator. Relative strength index is to measure the strength of the trend. Is that I don't use RSI, but you can use things like RSI and stochastic or MACD for divergence. So whenever I use a lagging oscillator or a trending indicator like MACD, I use it for divergence. Okay, meaning I'm comparing the higher lows, lower highs, and things like that. Okay, I'm looking for bullish or bearish divergence to see whether the trend is ending or not. So that's how I use it. Does it make sense? Yes, why not? In fact, any indicator you use, you can use it at any time frame you want. Okay, it's how you execute it and what's the strategy that's more important. I hope I answered your question, Daryl. Okay, so weekly chart on a euro dollar, very sideways, consolidating. 10, yeah, this is a key support level. And but if you look at the lower term time frame, right, you can see that this 105 is a key support level. Okay, now one thing to look up for is it's still consolidating. If we manage to break above this resistance of 106.30, high chance it might go towards the 108. It might push up to the next level of resistance. Okay, but it's still definitely sideways. Looking at the 4-hour chart, nice sideways movement. Nice sideways. Look at this. Support, resistance, support, resistance. Okay, you can simply trade off these levels if you want to for a kind of swing type of trade. Okay, so you can see a weekly chart is a nice big fat consolidation. 4-hour chart is also a nice big fat horizontal consolidation. Okay, don't forget the support level 105. Okay, anything in between for the euro dollar, I'll be a bit more careful, simply because this pair has not much direction. Look at that, the 1 hour chart doesn't look good to me at all. I'm not a big fan of the 1 hour chart. Okay, I'd rather trade off the 4 hours and see what happens. Okay, that's euro dollar for you. Hi Lenny. Euro pound. Okay, sure. Okay, let me go dollar yen. John wants a dollar yen first. Okay. Okay. Now, I mean, in my webinars, I'm trying to incorporate whatever I learn and whatever I'm trading into it so that you can learn effectively. Right now, I'm focusing a lot on trading psychology, which I will try to do a webinar or seminar on probably the next 1-2 months. And it's going to be very, very interesting. Okay, because trading psychology, I think, in my opinion, is something that's really lacking when it comes to education in Singapore. Okay, there's so many people teaching strategies out there, but very, very few teaching psychology. Okay, if you know somebody, please tell me about him or her. I'll be happy to look him up and try see whether we can work together, IG or something like that. But I think trading psychology is something that is there's a big gap in terms of education in Singapore, and that is so important to me. Okay, so where we are right now. Okay, dollar yen. Dollar yen. Let's go to a very long-term perspective weekly chart. Okay, so dollar yen weekly chart. Okay, I have this drawn a couple of weeks back, and you can see that it's forming some form. Let me zoom out a bit. It's forming some form of triangle, isn't it? Okay, whatever you want to call it, a wedge, triangle, doesn't matter, but it's forming some form of triangle. You can see that this is a nice swing up. Based on what I mentioned at the beginning, what kind of corrective structure this is? Cynthia is still here, right? Okay, so based on this, what I mentioned at the beginning of the webinar, this is more of a type 1 counter trend corrective structure. And you can see counter trend corrective structure, you see how many times, how long it took before it starts wanting to turn up? It took quite some time, okay? Because there's a fight going on in the middle here. You got your shorter term counter trend traders and you got a longer term trend traders, so there was a fight. But support level, I would say it's around, I need to adjust this line a bit, sorry. Support level, I would say it's around the 112 level, 112, which we have bounced off a couple of times. You look at the weekly candles, 1, 2, 3, 4, we have bounced off four weekly candles. So it's very significant support level at 112. If you go to the daily chart, okay, let me just delete this slide, Drew. Okay, we can see that 112 was tested again. Here. These circles I drew, I think it's a couple of weeks back. I think it's not relevant now. Let me just do the circles. Okay, so you see 112? Key support, 1 touch, 2 touch, and now it's moving upwards. Okay. If I draw a line across here, you can see the resistance is around the 11450 level. All right. So right now, it is consolidating around the 11450. Possible trade plan that some of you have taken is to buy support and short a resistance, as simple as that. Right now, it's a bit of middle of nowhere. Okay, but the key resistance, we are pushing that key resistance. Let's go to a 4-hour chart. Okay, so we see a 4-hour chart, very nice defined support and resistance levels. Okay, if you zoom in, you can see that there is a medium-term support around the 11375 level. 11375 level. Okay, don't forget on the high-term time frame, on a bigger perspective, this whole thing is a big fat horizontal consolidation. Okay, it's just that the price swing looks a bit more bullish. Right now, the short-term support is around 11375. So I'm not surprised if this support is held, we might make a push back to the key resistance at around 11450. So that's one of the trade plan that you can look out for. Okay, if it breaks below, okay, then there's a chance that it might come back down to this support level. But for me, the probability of the short trade is a bit lower because the previous swing looks a bit more bullish. So most probably you might want to test the top again and then see what happens. Okay. If you're looking for a long-term bullish buy trade based on the weekly chart, remember that triangle I drew? That means your target will be probably back to the previous high, around 116 and 117. You might want to place an alarm near the resistance around the 11480 or so, or maybe 11460, because if price gets to that point, right, then chances are, look out for the breakout. Okay, because if we break upwards, we might test the previous highs again. I think the highs was around January 2017 this year. It went all the way to 11850 or so. Okay, so we might do that. We might do that. Okay, right now, the first level of support must hold first around the 11370. Okay, and then the next level of resistance must be broken. Okay, so just take note of these few levels in dollar yen. Is that okay, John? Are you more bullish or bearish on this pair? Okay, Lenny, you wanted euro pound. Okay, let's go euro pound. Euro pound looking bullish. Okay, I'm not seeing euro pound for quite some time. Let me just have a quick look. Yeah. Okay, let me delete some of the irrelevant lines first. Okay, so if you see euro pound, the immediate swing, yes, is bullish. However, we are at a level of resistance already, around the 86, 80 to 87. Let's put 87, okay, 87. You see the touches here? So it's quite, again, long-term chart support and resistance levels is a range, it's not a exact price, okay? That's why I say around 86, 80 to 87. Okay, but you can see that we are near the resistance level, so around 87 cents or so. So let's go to the lower term time frame. Okay, so on the 4-hour chart, okay, you can't see this time. I am unable to zoom out already. But basically, if you see the 4-hour chart, okay, yes, it's definitely bullish. It looks very nice and bullish, but just be mindful of the resistance level here. Okay, let's see whether there's still short-term trades to be made. Yeah, there are a few short-term entries here, support here, support here. Let me see if there's any divergence. 1 hour showing slight bearish divergence already. So you see that this is a higher high, but the 1 hour is a slightly lower high. So a bit of a bearish divergence, which shows the momentum might be waning into the upside. If you look at the 4-hour charts, let me see where there's any divergence. Okay, you see the 4-hour charts, right? The highs in the MACD, right? See the MACD? It's not really making new highs, isn't it? It's actually making some sort of triple top. But if you see the price, it's still making new highs. So this is also a bearish divergence. So Lenny, if you're bullish, right, just be a bit more careful on this one, simply because of the bearish divergence on the 4-hour and the 1-hour chart. And also if you look at the daily chart, right, you can see where we are approaching that level of resistance already. Okay, so in terms of upside momentum, it might be waning. Anyway, where we are right now, I don't think there's any more trades to be taken because we are making a push higher. If you have taken your trades off some of the previous support levels, right, then you might want to be careful of the resistance levels. Okay, because yeah, just because of the bearish divergence that you might want to look out for. So it might make a turn from there. Yep. But what kind of triple are you looking for? Are you look at the daily chart triangle. Let me see what triangle I'm talking about. I know this one, right? Yep. It adds on to my analysis of this being a resistance area, isn't it? Yep, good point. I know which triangle. Yeah, you're drawing the top here. But without triangle even doesn't hide the fact that 87 cents is a resistance level. Yeah. Okay, so just take note of this level here. Are you looking to take a aggressive counter trend short, Lenny? Okay, if you're looking for a counter trend trade based on the 87 level, okay, I don't see what's wrong with that. You just got to be very careful because the risk to reward looks pretty decent. Still looks very bullish though, the chart. So if you want to try a longer term counter trend trade based on these levels, 87 near the 87 cents possible. Okay, let me go to weekly chart. See this level here? Yeah, 87 seems to be quite a strong level. Okay, so yeah, pay attention to the 87 level, see whether it will turn around. And also, yeah, you're correct. ECB meeting, be a bit more careful. But it is at the resistance, very near the resistance level already. Okay. Devil, pound, dollar, pound. Okay, some of you want pound, dollar. Let's go to pound, dollar now. Pound seems to be bearish, one of the more bearish pairs. In fact, wow, it's still looking very bearish. So if you look at the pound dollar chart, Okay, this is a daily chart. You can see the daily chart is actually in a big fat consolidation, isn't it? And high chance, high probability we're going to support level around the 121, 12140 or so. Okay, anywhere between 12120 and 12140. You see this level here? This whole level here. High chance we are going to that level. Okay, for me 124 was a key level. When 124 broke, right? I think I mentioned this in my previous webinar. When 124 broke, okay, it's a sign that the bears might push it downwards towards the 12140 or so. Okay. Taking a look at the short-term chart, some 4-hour chart, nice and bearish. Okay. I'm just looking for entry levels. I don't think there's any entry right now. It's pushing lower and lower. The only level that you could have entered on was a pullback around the London Open. What time was this? Wait, when was this? What is 4-hour chart? Sorry. This pullback was on last week, sorry. What I'm talking about. Okay, this was a nice little pullback, double top. It start coming down. 4 hours a downtrend. Let's see the short term charts 1 hour. Okay. So there are two level pullback. You see, beautiful downtrend. Okay, the first pullback was last week. Okay, second pullback was when it broke this level. Not the cleanest of pullback. This was today at 11 in the morning. Okay, so if you're aware of the downtrend, the heightened time frame, you can see that at first it tried to break. This was a false breakout here. Okay, when it came back, double top, came down again. This key level here on the short term charts, 12250, when it broke today, or this morning rather, and then it bounced back up, this was a nice little pullback for you to go down short. Again, on hindsight, it's very easy. But, okay, if you're still not competent enough on technical analysis, sorry, be very sure to draw your support and resistance lines. Because you see, drawing one line, I didn't draw this line today, I drew this line probably last week. But if you draw this line across here, okay, even without the move today, right, you can see that this level here is very key, 12250. So last week when it broke downwards, okay, and then maybe you took a shot here. Okay, did it work out? No. Okay, is it a good trade plan? Yes, because it was a downtrend, pull back to the previous support that was broken, turn resistance, and it's, I mean, the strategy more often than not it will come down again, but this time didn't shot up again. This looks to be a news candle as well, but it doesn't matter if you get stopped out here, because when the whole move turned back up and when this green candle closed high above this key line, right, this area here is a sign that this is a false breakout to the downside. In fact, some of you sharp enough will be able to identify this false breakout and might trade the counter trend trade to the upside back to the previous level of resistance. Okay, but when it respected this resistance again and start coming down and it clearly breaks this key line again, then you can say that, hey, the bears are back in charge. Okay, because the first time when it broke down, sorry about that, the first time when it broke down, it couldn't hold, the bears couldn't hold, and the bulls came in to push back up. The second time it broke down, okay, when the key level breaks for the second time, there's a high probability that the break is more sustainable. And for this case, just make pullback this afternoon and continue dropping. Okay, so right now where we are right now, there's really nothing to look at in terms of planning a trade. What you might want to look out for is if it starts bouncing back to this kind of support term resistance, maybe back to the 12210 level. Not sure whether it get there, it might, but ultimately it seems that it wants to go down to this support level of around 12120, 12130 or so. High chance. Okay, but if I just show you 3 different time frames, right? Daily, 4 hours, 1 hour. Does it look somewhat similar to what I showed you just now? I'm not sure whether I have it. Where's my chart? Maybe I close the chart. Okay. But remember the chart I showed you? Geez, I close it. Yeah, I think I closed it. Sorry about that. But basically, remember the chart I showed you just now, based on the setup last week. Very similar, because all 3 charts, you look at the moving averages, you look at the trend, it's all telling the same story. And that's the kind of trades that you look out for. So for those who mentioned pound dollar, yes, nice trending pair right now. It's just that you got to be a bit patient to see where you can take the trade. The nearest level of pullback is probably near the 122, 110 area, somewhere here. Okay, and then we'll see whether you can continue further. In terms of MACD, okay, just be a bit careful on the longer terms, on the swing trade side of things, because if you see the 4-hour chart, there's a lower low here, but there's a clear higher low here. So there's a bit of a bullish divergence. Okay, bullish divergence, meaning that there might be a pullback coming up soon. Okay, which plays into our setup if a pullback comes back to around the 12210 to 12220 area. Okay, so just be a bit patient, but the trend is definitely to the downside. All right, so doesn't mean you find a pair that's nice trending means you just jump in. It's not like that. Okay, sometimes it's hard to even find an entry, even though your analysis is spot on. Okay, so KK pound Kiwi, yeah, pound Aussie and pound Kiwi. Okay, let me move the last two before I wrap up the day. Okay, so pound Aussie, nice, same story. I think all the pound pairs are beautiful in terms of the trend. So if you look at the pound Aussie, okay, pound Aussie though has a bit of a support somewhere here. Okay, so pound Aussie, high chance that it's a bit closer to support. High chance we are looking at the 1.6 level. Only 4 pips away actually. Okay, but you see all these levels here that's touched. I think anywhere from 1.590 to 1.6, we are most probably we are going there, which is not far. It's only a couple of pips away. If you look at the 4-hour chart, okay, you can see this level that I drew here, 16130. Okay, once you draw a line there, it is a very clear level that you can see that's a very key level, because it's quite similar to pound dollar, isn't it? The thing broke, bounced back up, so this is a false breakout. Okay, however, this resistance was respected again. And what happened? It came back down. So when this level broke a second time, high chance the bears are in charge, and high chance we're moving to the 1.6 support level. Okay, so where we are right now, there's a 1-hour chart. This pullback was quite beautiful. Here, let me just draw a line here. Okay, this pullback was probably a bit hard to catch, but basically what you want to do is, let's see what's a good level that you might pull back to. Yeah, this is a 1-hour chart. Let's go to 15 minutes. Okay. So if you look at the 15-minute chart, right, this is a nice consolidation level. Okay, short-term pullback is back to the 16050 area, somewhere here, and then we see whether the market can start drifting downwards. Okay, if you short here and the thing shoots back up, right, okay, this might be considered a false breakout, and we might go to the next level of resistance somewhere around the 16070 area here before dropping again. Okay, so let's say if you take a short here based on this support that's broken and it shoots back up and you stopped out, don't immediately change your bias, because this is just a short-term chart. Longer term scale of things, is still possible that the market is still bearish. Okay, so when you move to the next level of resistance, see whether it makes sense, and don't be afraid to pull the trigger again to the short side. Okay, sometimes you have a trade plan, you might suffer 1 loss or even 2 losses, but if it's still valid, right, that's where you need to know, your analysis need to be strong enough to tell yourself that it is still valid. Your psychology need to be strong enough for you to be able to pull the trigger again, and it's possible that the trade still might work out. Okay. Okay, so that's pound Aussie, still bearish, KK, but just take note that it's approaching support level around the 1.590 to 1.6 area. Okay, pound Kiwi is looking, okay, pound Kiwi I think is the most bullish pound pair out there, because Kiwi is weak. Okay, so if you look at pound Kiwi, daily chart wise, let's see. Okay, it seems to be supported. Okay, it seems to be breaking out to the upside. Okay, so key level for pound Kiwi, I would say, is anywhere near the 17460 or so. 17460. Okay, now if you look at the 4-hour chart, it is just broken out. See this? Okay, so the key level here, okay, this is a nice breakout pullback. See, breakout upside pullback. So the key level here is around the 17430 or so. Now, if this is a false breakout, what will happen is that the market will most probably come back down to somewhere in the middle here and close below this support line. Okay, but right now it's still testing. There's a chance that it might start reacting off here and start moving up. Okay, but this looks to be a decent setup in terms of the upside. It seems to have broken upwards. Let's go to a lower term time frame. Okay, so in terms of the 4-hour chart, all right, it's still possible that the breakout to the upside is still valid. Okay, key thing is this low 174.20 to 30. Okay, if it breaks back below it, then most probably a false breakout. But looking at the high term time frame, okay, it might be a legit breakout and might move to the upside. All right, that's pound kiwi for you. So it's just, you can see all the pound pairs are dropping. This is the only pound pair that seems to be moving up, at least in the 4-hour daily chart. Yeah. Pound Aussie. So if you analyze all the pound pairs across the board, right? If you are planning to short a pound pair, okay, it makes more sense to short your pound Aussie or your pound dollar, okay, because it doesn't make sense to short the pound kiwi simply because the pound kiwi is the strongest pound pair out there. Same thing if you flip it. If you're bullish on the pound, it doesn't make sense to buy the pound dollar or pound Aussie because it's so bearish. Okay, your pound kiwi might be the best bet if you're bullish on the pound. So this is how you analyze all the different pound pairs and make a decision based on your bullish or bearish bias of which one to trade. Okay. Okay, I'll do last one, Aussie dollar. Okay, Aussie dollar, I think if you look past 1 or 2 webinars ago, I did mention that this 77 level was very key. You see these 2 lines I drew? Very, very strong resistance level. Okay, so for those of you that benefited from it, congrats. I mean, this level, whenever it touch, it just comes down all the time. Look at how many touches. So it did happen again on 23rd Feb, a touch, and the whole thing came down. Now, what I can foresee the Aussie dollar is that the daily has made a lower low, okay, because this low has been broken by this low. So daily is turning to the downside. Okay, what I based on daily chart, right, it might come back to visit the level of support, the previous low around the 75.50 or so. Okay, if you look at the 4-hour chart, you can see some form of bullish flag, a bearish flag, sorry. I'm talking about bearish flag. Let me delete some of the lines here, too many circles. Okay, but you can see okay, you can see some form of bearish flag forming, something like that. Okay, and again, this is a type 1 corrective structure, which means that the counter trend, your correction is counter trend. So you got to be a bit more patient because the probability of it continuing downtrend is still there, but it's not as high as a horizontal or a width trend corrective structure. Okay, so if you look at the 4-hour chart, very clear bearish flag pattern. Okay, what you want to see happen first is for it to break the flag pattern. So we zoom out a bit. Okay, you can see that the 15-minute chart. Let me go to 1-hour chart. Sorry. Okay, you can see the 1-hour chart. Okay, we did test the bottom of the channel. Okay, the top of the channel was reacted from this morning, and if we break the previous low, okay, key level is this level here for the Aussie dollar, 75.85 or so. If we break the previous low, right, high chance we are going to test the previous low of 75.50, and we might continue downwards. Okay, we might continue downwards, maybe back to all the way to 75 even. Okay, but I'm slightly more bearish. I'm using the daily and 4-hour chart as my reference point for the Aussie dollar. Okay, so take note of this bearish flag pattern. Okay, Tao? Okay, if not, yes, as usual, I exceeded time. Again, this webinar will be recorded immediately and it'll be uploaded by tomorrow, if not latest Thursday. But yeah, do review the webinar if you don't understand price action and and try to try to understand, you know, the analysis and what I'm trying to talk about, because the planning is more important than the direction. Okay, I can tell you, you know, what the market is trying to do, but the next second the news might come out, it might change the whole dynamic. So understanding the structure, understanding the price action, understanding the flow, the sentiment behind the moves are more important. That's where I try to impart the analysis skill to you through the webinars. Okay, so if not, thank you so much for coming by for today's session again. My name is Nabil Mata, I'll see you in next 2 weeks. Cheers.